What's good, guys? Tito back with another video. Back to the channel where I teach you all about how to make this Wi-Fi bread. Now, you probably clicked on this video like, Tito, why are you attacking me? Like, I lost a little bit of money on options, and I want to know what to do about it. So these are the things that I've seen that people do that like make them lose the most money if things don't go right. Number one is you're trading too close to expiration. Now, the weeklies, that means those expire in the same week. So those say today is, what's we gonna call it? 9/18, Friday. That means people are literally trading 9/18 contracts on Thursday and expecting the stock to do a major move. Now, if you load up on these calls, that means if you buy a bunch of them, say you buy a bunch of Apple 9/18 calls, like 115, that means it has to go pretty close to 115 for you to make pretty big profit. Now, a lot of people see that sometimes the market is completely batshit. So like it'll just go down, like it'll just tank to 108 and you're stuck with 80% of a loss. Now you just blew your whole account if you just put your whole account into that trade. That's another thing. Don't put your account into one trade. A lot of people I've seen just like, dang, Tesla's gonna rock it, so I'm gonna put my whole account into Tesla. No, always keep a rule of thumb. Remember to make your own rules. So like I like to do like maybe 50% of my portfolio in options at one time. If I'm feeling frisky, I'll do like 70%. But I never trade more than 70% of my portfolio. Just because I'm doing the 2K challenge, I trade like 80%, 90%, because like that's the point of the challenge. But other than that, if you're trading with personal money, life savings, anything like that, never trade more than 50% of your account. Another thing that I see that people are trading bid-ask prices that are way too spread out. So a bid is how much a person is like willing to pay for it, and ask is how much the highest that somebody is willing to sell it. So that means that these two combine to make your share price. So the price that you pay for the contract is the bid and the ask combined. But some people don't look at the bid ask and see 00 is just the bid and 300 something. So that's going to be very hard to sell when it's going either direction. It's going to be very volatile. That's what I've seen over the years. Another thing is people just don't know what companies they're trading. So don't trade a company you've never heard of that have options that nobody is going to buy. Just because it looks like a good entry point, it doesn't mean it's the right company to trade. I like to stick to tech. Like right now, tech is pretty choppy, so I stick to like things like Wayfair, Overstock, like AMD, like those tech companies that are pretty corona proof. E-commerce is coming back, had a huge sell-off, so e-commerce is coming back, so I started getting some e-commerce calls. And then also like Play, Dave & Buster's started getting some Dave & Buster's puts. The reason why I got that is because they're almost going bankrupt, because they literally have, who goes to Dave & Buster's? Like, think about that. So you just want to play what the news is giving you. That's another thing. People don't do their research. So literally you're not doing your research. So like, what do you expect to happen? Like, you don't really know what's happening. You're just putting your money there and just hoping for the best, when you should be doing your research and should be pretty much doing an educated guess. That's what options are, an educated guess of what you think is going to happen. Once you do that, then you have a way better strategy. Like if you see like Dave & Buster's going bankrupt, you're like, puts, but day trade them. A lot of people do not use their day trades correctly. Use their day trades for trades that you know are going to work for the day. Don't do swing trades and try to day trade them. You're not going to make any profit. So like, say it's a red day and you got a call. It's not going to immediately just go up just because you got a call. It's going to keep tanking like a red day usually would. And then finally tomorrow it's going to go green if it goes green. So that's what I like doing a lot. I like swinging a lot, especially because I got banned from day trades. I did 4 on accident and then I got banned. It really sucks. Like, that's another thing. Like, not having your day trades really sucks. And that's the thing. People get into trades that should be day traded, like Tesla, and try to swing them. That's not going to work unless you have balls of steel, and Tesla manages to go up. And sometimes Tesla just tanks whenever it wants to. So it could just be completely ruined by your day trade. So yeah, that's another thing. Sometimes Robinhood just sucks and literally doesn't let you sell because of high traffic. But yeah, if you do have an action plan of how to get out of your trade, make sure to have an action plan on how to get out of your trade and set a stop loss. So like that's the most amount of loss you're willing to take on a trade, because at some point you gotta sell it. Like you can't just wait till your thing is worth it. So like, I'm gonna hold this till next week, and then eventually your prices get lower and lower each week. Because if you look at the Robinhood, it will show prices get lower and lower for each contract for each week. So that means that's what's going to happen to your contract each week. So you want to make sure that you set a stop loss. If it's not working, the trade is not working, get out of the trade. Keep moving, keep pushing. This is not a YOLO thing. We're not YOLOing our money into one trade so you can get rich. Like, it's a constant process. So with that way, options trading is actually usable and actually profitable. Other than that, if you start YOLOing, you're just going to be up and down, up and down. Of course, crashes are inevitable. Like, the market crashes, nothing you can do about that. Nobody knew about that. So like, literally just play conservative and you'll keep gaining money over time. That's really what the goal is. You want to keep gaining money over time. Set a goal for yourself. Set a profit goal. Set a how many trades you want to be in at one time, because a lot of people are in way too many trades at one time. And after you figure that out, say you only want to be in 4 trades max at once. That's a very good strategy. So now you only have 4 trades that you have to worry about. But if you like spread like say your account is 3K, you spread 2K in a Tesla, the rest 250 each, that's not gonna work. Like, because like most of your money is in Tesla, so like whatever Tesla does pretty much runs your account. You want to be pretty evenly spread out between your contracts if you're gonna do 4. Make sure you have a strength, what you like to trade the most, and once you find a consistent play, stick with it. That's what I do a lot. I stick with my plays, depending on what happens. If I keep profiting from it, I'm gonna keep doing it, because that's literally a cash cow. Once you find a way to make it cash cow, keep doing it, keep milking the cow until it gives up, because pretty much the market eventually will give up. So that's seen with a lot of plays. So really, guys, that's all I had to say. This is just what I've seen, a little compilation of what I've seen of how to succeed in the market, why people are losing in the market. Yeah, man, if you guys enjoyed the video, please subscribe. We're almost at 3K subscribers, 80 more people to go. Let's go. And if you enjoyed it, like the video. Appreciate you guys. I'll see you guys later. Peace.